The voters voted, the votes are counted, there was no debate, no arguments, no riots. Donald Trump was reelected as president of the United States. At the end of the day, as James Carville said in 1992,
"Is the economy stupid?"
And the voters voted that way. They voted down Bidenomics and the Harris immigration stance the last 4 years and were less swayed than most thought on social issues. Troy Charles and I will be doing a live stream on Thursday, November 21st at 6 p.m., focused largely on the potential outcomes in the financial markets and the economy of a second Trump presidency. There's a link in the description below in case you want to tune in live and ask questions. It should be our normal fun time, and I think there will be lots of thoughtful discussion and great information in it for investors, clients, and oak harvest prospects. I also suggest you go back and you watch my last 3 videos, particularly the 2 titled, Will 2024 Echo 2016? What a Trump win would mean for the stock market and economy. I posted that Friday before the election, and a second titled, Stock Market Hedging Before the Election, Are You Overpaying?, which was done in late October as the media was touting the end-of-the-world scenarios for Election Day itself. I think both proved rather prescient and show what our team looks at behind the scenes to gauge investor sentiment and positioning, trying to strip out our emotions. Given the length of next week's event and our Lunch and Learn last Wednesday, I'm going to take this as a quick video and mainly fill it with many charts, historic data, and comparisons to late 2016 when Trump unexpectedly won. I'm not going to give you too much detail here, as hopefully we'll cover most of this on the verbal side of the charts next Thursday night. First, the political makeup in DC is historically good for your money. A GOP sweep in DC is historically the second best setup for stocks, only slightly behind a Democratic president and a GOP Senate. The first 2 years averaged over 12% under a Republican sweep, according to Fidelity. Here's a table we presented last week with stock market returns under party sweeping the presidency, House, and Senate over the next 2 years. Contrary to most thinking, historically, sweeps have not been disasters for the market. In fact, Republican sweeps have been slightly more favorable than Democratic ones. Here's a 4-year annual return data compiled by Fidelity. Here's another great graphic from my former employer Invesco comparing stock returns to each economic growth during each president since 1957. Investors, your money is green, not red or blue. We are now in the seasonally strongest period of the year, November through April. Here's the monthly return data of the S&P 500 for the last 15 years. Here's that same seasonal data for the presidential election years dating back to 1928 from Steve Suttmeyer's group at Bank America. Remember, viewers, we first discussed this almost a year ago into year-end 2023 as a bullish setup for 2024 stock market returns. Also, strong first-half stock returns usually lead to strong finishes. Here's that data on historically strong first halves and how they've ended. Here's more of that historic data returns in good first quarters from Charlie Biello. He always has great stats. This is the data going back to the Great Depression showing the best returns and what happened throughout the year-end. Investors, it's very rare to have a down return in the fourth quarter after a strong first 9 months. In fact, only 2 times out of 19 years have we had returns over 19% for the first 3 quarters and had a down fourth quarter. That was in 1943 and 1983. History says your money, if invested in the U.S. stock market index, S&P 500, should be treated very well through at least the inaugural ball in 2025. Investors, here's another great chart from 314 Research on stock market seasonality. Historically, stock markets have topped in December or January, not in November. For shorter-term traders, here's more trading data from Suttmeyer's group at Bank America on the first and last 10 trading days of each month during the presidential election years. I know at least 48% of voters aren't pleased with the current outcome. However, as we've messaged for over the last 6 years at Oak Harvest, your money is green, it's not blue or red. Stocks move on earnings, more specifically changes in free cash flow and interest rates. Here's a chart from Lance Roberts on the S&P 500's earnings and earnings growth rates over time. Over long periods, up and to the right, regardless of who's president. Trump 1.0 brought in lower corporate taxes, moderate inflation, stable interest rates, and a higher S&P 500 in earnings in the second half of 2017 and 2018. And stocks and your money loved it. I recall about 12 months after the stock gains, many of those who publicly were anti-Trump suddenly were very quiet and smiling. Why? Because the economy was okay, their net worth was up, and things were calmer in the world for at least the first few years. So what worked in the first 2 years of Trump 1.0? Let's look broadly at it. I'll overlay the chart of 2016 and 17 with 2024, year-to-date and 2025 on the chart, the major indexes. First, the S&P 500, then the NASDAQ composite. And finally, what has been a laggard up until recently under the current administration, the Russell 2000 Small Cap Index, which is largely domestic names, more indebted, and lots of smaller financial names. So far, it looks to me like history is repeating in the stock market. A few other charts to think about. Didn't Trump bash China right out of the gate in late 2016 and 17? Yes, he did. And let's look at what most speculative Chinese stocks as measured by the KWEB China Internet Index back then. Here's the KWEB ETF chart. An initial sell-off in late 2016 into year-end, then up and to the right, all of 2017. And a chart of Bitcoin overlaid then and now. Will Trump 2.0 be different than Trump 1.0, as the doomers are saying? Will democracy end any more quickly under Donald Trump than it was ending under prior presidential terms with orders to waive student debt or allow mass border immigration? I don't know. Investors, the biggest surprise I can come up with for markets in 2025, I mentioned it almost over a month ago. What's that? A collapse in implied spot volatility, the VIX index in 2025 back below 10. Something I personally have said for 5 years would never happen again in my life. But you know what? Never is a very long time, and history has certainly been repeating the last few years in the markets. I know almost no one can fathom 2025 being less volatile under a Trump presidency than more volatile given what we remember about his first term or the last 4 years of him out of office. Will volatility go under 10 again in 2025 like it did 2017, which would equate to an S&P 500 of over 7,000 in late 2025? I don't know, but I can tell you it's a secular bull market since 2011 and a cyclical bull market since the cyclical lows in October of 2022 pointing higher. This did include a strong bull run-up during the first 15 months of Trump 1.0. Investors, still a bull market until it proves itself it isn't, regardless of whether your candidate won last week or not. Hopefully, our team at Oak Harvest kept you from making emotional decisions based on politics the last 5 or 6 years. Hopefully, you're enjoying this bull market in stocks, whether you're invested aggressively for growth or more conservatively for income. Investors, against the nearing decade-long doomer calls from the likes of Jeremy Grantham, Harry Dent, Robert Prechter, Jim Grant, and a myriad of retired billionaire hedge fund managers that come on CNBC almost monthly to scare viewers, it's still a bull market, and investors, as Martha Stewart says, at least for investors,
now that's a good thing.
For myself, from everyone at Oak Harvest, have a blessed weekend.